There has been a lot of speculation about how high render could go in that next bullish market. So I thought I'd spend some time with you guys today to kind of share my thoughts and opinions on the price action. This will be my render price prediction for 2025. As I get into this video, if you do find it useful and informative, smash that like button. If you're new to the channel, subscribe for more insights into everything crypto. So let's go ahead and get started with everything render. So this here is render paired up with USDT. We're on the 1-day Binance chart. Now, this is going to be a very interesting chart. We don't have a huge amount of data. Okay, so we can see here that we have a peak up here in November of 2021, right? So the previous bull market. And we have, of course, exceeded that. We then also saw a move to the downside over here at 27.4 cents, which was in June of 2022. Okay, so some really interesting stuff. Now, for us to be predictive over where we think the price action is going to go, we're going to use a couple of different tools. We're going to use the Fibonacci retracement and extension tool. That's this one right here. Okay, I'm going to basically make sure that I have my kind of indicator here based on the log scale, which is this little tick button down here. If you see it's not ticked, it kind of changes the numbers. But I use my chart on logarithmic, so I need to make sure that my tools are on logarithmic, okay? And of course, these are the settings. You can pause the video if you want to have a look at that. So I'm going to use the Fibonacci extension and retracement tool that's built into TradingView, and it's this one just here. Down in the bottom right hand corner here, you can see my chart is on logarithmic. It looks like this on log. When it's off, it looks like this. I find it much easier to analyze the price on logarithmic than not on logarithmic. It'll be crazy in the crypto world with so much volatility not to use it on the logarithmic scale. Okay, so that's the first tool that we're going to use. We're going to use the Fibonacci retracement tool. The second thing that we're going to use is Elliott Wave. Elliott Wave is a tool or price action analysis, I should say, that allows you to track the behavior of previous investors, buyers and sellers, right? There are multiple different patterns and structures to this. We are going to obviously use whatever fits the model, right? We haven't analyzed it. We've got nothing on the chart, so we're going to do it all from scratch. And this is a complicated price analysis method. I've put together a whole course on it, so if you're interested in understanding Elliott Wave, go ahead and check out 𝗕𝗘𝗪𝗏𝗀𝗏com. It's linked in the description down below. I go into every pattern, every rule, and how to implement it. It's quite an extensive course, but if you're serious about understanding the psychology of the markets and being able to predict out the next move based on people's behavior, then Elliott Wave is your tool that you're going to want to learn. Okay, so those are the two things. We don't need anything more, right? We've got the EMAs and stuff on here, but you know, they're kind of redundant. We don't need them. I could turn them off and we'll have a super clean chart that'll look like this. Okay, so we're only going to use fib levels and we're only going to use Elliott Wave. Of course, you could use other tools like SMC, Smart Money Concepts. I also put a course on that one over at Cheeky School as well, which is a pretty powerful course and powerful concepts in the markets. But we only need Elliott Wave and we only need Fibonacci. So those are the tools we're going to use. It's going to be super simple, right? So knowing that we have a swing high and a swing low of the previous bear market helps a little bit, but it doesn't help us with the predictive capabilities. We only know at this stage on this macro scale the selling pressure that we saw over here. We then see reversal in the market and we see buying pressure. We haven't seen the combination of both of that in a market cycle. Okay, so we have an end of a cycle and then we have a beginning of a cycle. And it hasn't really helped us be overly that predictive. But what we can do is we can take a look at the internal workings here and we can then try to predict out what's going to happen next. My concern is this little area right here at the minute. Okay, the most recent pull to the downside. We need to take a deep look at that to understand where the 2025 is going to be going next. Okay, but before we get to there, we also need to see this move and we need to see this move and what it means to the price action of render. Okay, so let's start down here. And we don't really care about the bear market. It's kind of done. So we'll start taking a look at everything this side. Now, the interesting thing about this is we have a very impulsive yet overlapping nature. Okay, so I'm not concerned so much about this area. Low liquidity could kind of concern us a little bit. But for the most part, what we can see is a very impulsive move here and a deep retracement here. Okay. Now, from a psychology point of view, what's really important about this is you have distribution and you have accumulation. Okay. So let's break this down a little bit. So we have basically seen an accumulation over here, a distribution reaccumulation. Okay, some people would have tried to look at the market and said, look, head and shoulder pattern and bearish, and they would have kind of really kind of been stopped out massively. But that's not really what's gone on here. The impulsive nature of this tells us that we were expecting this. Okay, so if we go ahead and use the fib retracement from the low to the high up here, there was a typical area that we would have expected price to cool off to. Okay, and I'm going to draw in with the yellow box. You can see it right here, and I'll remove the fibs off the chart. So here is what we would have been looking for, right? So we would have seen the 5-wave impulsive break right here, and we would have been looking for selling and then accumulating. Okay, so you can see we spent a bit of time down here. The key was that we did not go down lower than 37 cents at that time. Okay, so that's an important takeaway. I'm going to go ahead and remove all this noise. We don't need to see it, but it just helps you understand the psychology a little bit. We then had this break to the upside, and what would be an impulsive breakdown that failed. Okay, so as you can see, this is a zigzag pattern and not an impulsive pattern. So this is kind of where the markets were telling us without telling us directly. So if you're just looking at the daily time frame, we would have been looking, look, we're going to be breaking down even further. But it was wrong. It was wrong because the internal workings here are actually ABC structure, not anything more than that. The importance of that, again, is important because we can see a swing high here and a swing low here, and those two are overlapping. Now, outside of our kind of standard Elliott wave stuff, we could also say right inside here is a very interesting pocket of previous, let me snap that to the correct wick, previous resistance that turns to support. Okay, you can see it right inside there. But what we do want to do is measure this distance. Okay, so our lows of October 22 to the highs of November 22. We want to move that over to the lows that we saw down here in November 2020. And we can see that we had a good run to the upside. But this run to the upside did not hit 1.618. Okay. We can then see a run back to the upside over here as well. And you can see here that this also was an interesting structure point that is larger than wave one. Larger than wave one. Okay, so to me, we have a diagonal based pattern here with the overlapping nature between the support and the resistances. And then we get into this next run to the upside. But it doesn't make us impulsive. And it doesn't make us impulsive because if we measure this entire distance from the swing high to the swing low, down here, let me see if I can snap it. There we go. So from 37 cents to 2.95, October 22 to May 23, we move this over to our swing low that we had over here. And I'm going to go zoom in so you guys can see that one is the 17th of August, 2023. Okay, we can see that we came up to what our expected ranges were, essentially between 1 and 1.236, with 1.618 being at $35, which we did not hit. Okay, so this would have been the area where we would have seen and should have been predicting a rejection in the market. The reason for that is that although we have those 5-wave movements, they're not impulsive. We are in fact in corrective territory. Okay, so it's good to see because this now means that we have a really interesting structure. For argument's sake, we could even take this one down here and say that we have a kind of diagonal pattern, then an impulsive one. Okay, and so for the most part, it doesn't matter so much. We can just kind of do this to kind of help you understand it in a little bit more of layman's terms. But basically A, B, and C structure. Like I said, I don't really care about that wick low over there. We could argue maybe it was a running flat of some kind before we got into more bullish markets. Lots of different ways of looking at it. Like I say, I don't overly mind all that much about where we start this one because it's already completed. Okay, so as we can now see, the next concern that we had was this break to the downside, right? So since we had our swing high up here, and I'm going to remove the previous bull market one. So the previous swing high that was, of course, up in March of 2024, we saw a big break to the downside. And we can see, of course, more of a run to the downside, more overlap. Okay, so what was previous support, and I'm going to draw it in here as well, right in here, you can see is acting as resistances for us at the moment as well. Now, that means the overlap, okay, for the reference, the overlap here and here is one of two things. One, we're in corrective territory. Or two, we are in a big bearish breakdown, and this is just a huge diagonal based move. Now, bearing in mind that I've done a lot on extensive research and analysis on the cycle theories and what's going on with Bitcoin and crypto market generally, to me, it doesn't look like we have a big worry in terms of a big breakdown of 2025. 2025 should be an insanely bullish year. So I don't think we are in the kind of the scope of a big bearish breakdown, but we can't rule it out unless we can break up higher than $13.83.8. So I just want to put a caveat out there. I don't expect it to be that, but it's a possible scenario. Okay, let's measure this out because although there's ideas that things are looking bearish on render, actually it's a reaccumulation phase, and we can see here we have not hit 1.618. We bounced up, we created the overlap, so the only scenario is going to be some kind of in this case, expanding diagonal. And for that, we'd have to see a very, very big breakdown. Okay, let me show you what that would look like here as I draw a couple of trend lines in just to depict what this would look like to you guys. Okay, so we would be looking at this through that lens of, some people will call it a megaphone pattern, but it's an expanding diagonal based pattern. You'd have a wave 1, a wave 2, a wave 3, a wave 4 would actually potentially test that trend line, but we'll just leave it here for now, and then a big wave 5. That's what it would look like, and that would be a very bearish thing for the price action. Instead, I would actually take a look at this through the idea that maybe, and based on everything that I'm seeing inside the chart, we actually have what would be called a triple zigzag pattern. A zigzag is an ABC. ABC contains 5 waves in a wave, which is really badly drawn, but a 5-3-5 structure. Let me actually go ahead and draw that in a little bit more meaningful way, right? So a zigzag pattern would look like this. You'd have A, B, and C, but inside the A, B, and C, you'd actually have 5 waves in A, and you'd have 5 waves in C, right? 5, 3 up as well. So I'll just go ahead and draw in like another 3-wave move. So basically you have 5 down, 3 up, 5 down, or in reverse, but of course I don't use the correct terminology. I just think it's bonkers to say an inverted zigzag pattern. Just seems bonkers. Just call it a zigzag and just say it's up or down. Anyway, so for that, we would actually measure this distance. And the reason I think it's a highly possible that that is what's going on here is I can see the internal workings looking more like a zigzag pattern. Okay, and that would actually mean that we'd have a 3-wave move complete in line with everything I've been talking about with Bitcoin and all that kind of stuff. So here we would see basically a move down just a little bit. So we're not yet done, but we're very close. We would be looking, it can of course come down lower, but I suspect it won't. Anywhere in this range, 256 to 459.4. Okay, so this area, and it could be anywhere in there, is where we're likely to find the next big breakout situation, okay? So I think based on our current structure, and I'm going to go ahead and remove this fib off and then kind of narrow this down a little bit for you guys. We are seeing a possible scenario unfolding right now, which is good. So we'll go ahead and measure that in. I will use the current swing high. It may go up higher before we move down, but this is going to give you just a ballpark figure as to why I do not think our August low, which I think that one is, isn't it? Yeah, August is not likely to get broken, so I'll snap that in there. And so we're looking for 385 to 417. It doesn't matter anyway, because we're not talking about what's going on now. We're talking about the price action of the future. And the reason why that's super important, right, is that we get into the next big bullish market here. We could see a large move, right? So we have a lot of overlap here, and we can kind of see this playing out interesting. We have a zigzag pattern coming up here as well. So this is probably not an ABC structure, probably better fit in a WXY structure is probably the better way of looking at it. But we're going to be looking for a breakout. And the problem that we have is there isn't a lot of data here to kind of be overly too predictive over that next move. Now, the bulls out there might look for history to repeat itself. So we can kind of give ourselves a bit of an idea. But until formations start, it's going to be quite difficult. We'll use the swing low that we had at the $3.41. And we use that to be predictive over where we think the next possible scenarios go. In order for me to do this, I'm just going to zoom right in on this wick here, and we'll make sure that I get this snapped exactly on the 41.0. See if I can actually go ahead and do that quickly. Yeah. Okay, cool. So we'll do that. And then what we'll do is zoom back out and I'll show you where those targets are, right? So the bulls could potentially be arguing there's a move out towards 172 to $434. However, I think conservatively, actually, we want to be thinking more about what's going to sit in these resistance levels, right? Because Elliott wave's great, but when you haven't got a structure, you have to rely on sentiment. And sentiment is bullish. It is likely to see a bit of a run. Between 38 and 74 is probably the higher areas. The Fibonacci sequencing levels between the 0.618 and the 786, to me, would be the areas of resistance. Okay, so that would be my conservative. The bulls might think about 172 to 434, but for me, yeah, let's be more conservative. Aim for 38 to 74, and I think the market will be pretty decent. So overall, render's in a good position. We are talking about a few percentage points from our swing lows down at that kind of level of $3.41. We are going to be looking for around 1,000% to the lower end of my expectations, and about 2,000% to get to $74. And of course, if the bulls are right and they see a significant surge to the upside, we are going to be talking about 5,000% upwards towards 12,000. I don't see it myself, but it's a possible scenario that we can't ignore. So we want to keep it in the back of our minds. But that's going to be where I think the price action is heading here for render. But these are just my thoughts and opinions on the data in the charts as I see it. What do you think? Let me know in the comments down below, or join us in our free Discord server and we can continue the conversations down there. If you found this video helpful, don't forget to hit that like button and subscribe to our channel for more insights into the world of cryptocurrency. And guys, if you haven't done so already, I urge you to check that video out right there. It's not one that you're going to want to miss.